Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Hello, everyone, and welcome to this Thursday, August 15th special edition of the AICPA Town Hall. My name is Michael Cerami, and I'll be one of your hosts for today's Town Hall. I hope everyone's enjoying the last few weeks of summer. Pretty soon, the page will turn to September. We are doing a special on-demand edition of the Town Hall today, which means it is available on demand only. But we did not want to go 4 weeks before bringing you some important content updates. I'll be joined momentarily by Rachel Dresen and Lisa Simpson. I did want to let everyone know again that today's Town Hall is only available on demand, and it will not be available for CPE. So we realize how important CPE is to this audience, and we'll be back on our regular schedule again in 2 weeks on August 29th. So let's go ahead and get started. A lot to cover today. Again, I'm going to be joined in just a minute by Rachel Dresen, who's in our governmental affairs team down in DC with a legislative update, and then Lisa Simpson. Lisa's going to come in and give us some technical updates shortly. So Rachel, let's go ahead and welcome you in.
Hi,
hey Rachel,
good to be
how
with
are
you
you today? Good to see
Great.
you. So Rachel, I know it's a little quiet, but there are some things happening. Why don't you go ahead and update us on the Chevron deference?
Yeah, it is pretty quiet here in DC. Congress is on their August recess, which is when all the senators and the representatives go home to their states and districts and meet with constituents back home, and they do their local meetings. So if you are watching this and you're looking to meet with your senator or representative at home, this is a good time to make that request. And here in DC, as you said, things are quiet. The commute is probably half the time. So those of us who live here enjoy it. But that doesn't mean the work has stopped in Congress. So staff are still there. While it is true that this is, when they take vacations. So some might be gone for some period of August. They are still working. I know when I was on the Hill, it was kind of the unwritten rule that you didn't take vacation when Congress was in session. So everyone took it in August. But we still had a lot to get done to get prepared for what would be happening in the fall. So that's what they're doing right now. And some of what they're working on could impact the profession, as you mentioned, related to the Supreme Court's ruling on the Chevron deference. And just a reminder, we've talked about this on previous town halls, but the Chevron deference has to do with the courts. When statutory language was not explicit, the courts would then give deference to the federal regulator's interpretation. So they made a ruling on this back at the end of June. And in light of that, those who are concerned with what they viewed as regulatory overreach have now come together and are looking at ways in which they might be able to pull back on some of the regulations and try to limit some of the agency's power in the future. And in doing so, they've even started a working group, which has about, close to 20 or so Republican senators at this point. And the staff, they have sent around 100 letters to agencies with questions on how they are going to now move forward in light of the Supreme Court's decision. The goal is for legislative bills to get introduced that would have to do with the relationship between the executive, the legislative, and the judicial branches. So that's the ultimate goal. But right now they're doing, a lot of just the background work. But we mentioned this to all of you because this could impact the profession. It could impact, tax regulations. It could impact SEC regulations. So it's something that we are monitoring very closely. So we wanted to give you an update on all of that, and there'll be more information, I'm sure, on future town halls on what they're doing within this working group.
Great, thanks, Rachel. And on government funding.
So yeah, this is another area in which staff is working hard, because when they come back at the beginning of September, they only have a little bit over a dozen or so days that they will be in session before the fiscal year ends on September 30th. So they all want to avert a shutdown, especially during an election year. That's never a good thing. So they're trying to figure out, the best way to move forward in September. There are 12 appropriations bills. They have not sent any of those 12 bills to the president's desk yet, and they won't be able to do so in time for the end of the fiscal year. So we're looking at a CR, or a continuing resolution, which would continue to fund the government at the current levels for however much time they determine. So it could be, for a few weeks, it could be for a few months. There are some who have proposed doing it for 6 months, which we understand that would land right in the middle of tax season. But right now, these discussions are going on. Staff is looking at, whether or not they do one large CR where they put all 12 bills together in one package, or do they break it up into, mini CRs? So, maybe they do, 3 in a group at a time, or 4, any combination thereof. So those are some of the things that they're taking into consideration, as well as, will they include any policy riders on this? When they say a clean CR, they mean it's just clean, it extends it for a certain amount of time, no policy riders. But if they include policy riders, then it can get a little bit messy, because that's when it can get a little bit political. And in an election year, that could provide a challenge. But we'll see. But like I said, staff was working on this while all the senators and representatives are at home meeting with constituents, and then they'll come back at the beginning of September and have just a limited amount of time to pass something before the end of the year.
Great, thank you, Rachel. I know we did have a little update on beneficial ownership as well.
Yeah, just a couple of things that we wanted to mention on the legislative front on beneficial ownership. So Senator Timmons, Senator Langford, who is from Oklahoma, he has introduced legislation that would provide a 1-year delay on the reporting requirement for BOI. His belief is that under the Corporate Transparency Act, there was a 2-year period for compliance of the reporting requirement, but FinCEN only gave 1 year. So this legislation would provide that extra year. And the AICPA is supportive of this, and it would allow for the court cases to continue to move through their process. So that is legislation that we're following. And we've also mentioned on the town hall before the bill that Representative Timmons from South Carolina has been working on, and he continues to work on that legislation, and that would provide a safe harbor. So those providing services such as, CPAs, they would have that safe harbor that their activities would not be considered UPL. So that's another bill that we're working with staff as they prepare to introduce that legislation.
Hey, great. Thank you, Rachel. Great update. I know we've got more to come. Things will start picking up again in September. Lisa, welcome. Great to see you.
Thanks. Good to be back.
Enjoying these final few weeks of summer, but I know you had a little something to add on BOI as well.
Yeah, I wanted to let everyone know what we're continuing to do with FinCEN, what FinCEN is trying to do to raise awareness. But I'll start with one thing that Rachel mentioned, which was around the lawsuits that are going on as to whether or not CTA is even constitutional. You'll remember a few months ago, there was a court in Alabama that ruled that it wasn't. FinCEN has subsequently appealed, and that's actually going to a hearing on September 27th. So we've got about 6 more weeks, and there'll be a hearing because obviously FinCEN is continuing to push that the filing requirement is constitutional. There are 7 other states, or I'm sorry, a total of 7 states where this type of litigation is ongoing. We'll make sure that we keep you up to date. And we also got some news this week that FinCEN was trying to work on raising awareness around the filing requirements, which has been one of our main concerns. So they've released a public service announcement that I'm not sure where all they're playing it, but they are trying to raise awareness. There's also an interesting 5-minute video that shows you how to actually file the report. A couple of other updates on that, though. Last town hall, we asked how your clients or you were feeling about BOI requirements, and we asked if your clients were aware of the filings that were going to be needed. And of those that said, those that responded for their clients, the majority felt that less than 25% were aware of the filing requirement. So we need a lot of activity around that PSA. And I think that supports our advocacy position that a 1-year delay that in that Langford bill would be really beneficial to all of these small firm owners who are going to be subject but don't know about the requirements. We also asked about the time frame for reporting changes in BOI information. And if you remember, once you file the report, the initial report, if there's a change, then you only have 30 days to file an updated BOI report. Our advocacy position remains that that is simply not enough time. And our polling results agreed with that. The majority of the people responding to the poll felt that it should be, an annual reporting of any changes rather than the current 30 or potential that's been floated of around 90 or 120 days. So as I mentioned, we're continuing our advocacy efforts because we do understand that, there's concern around this. We're working with FinCEN on a new topic, which is if a small business is in an area that's been impacted by a federally declared disaster, we're asking BOI or FinCEN to consider giving BOI relief as well. And it's similar to what would happen with an FBAR filing if there's a disaster relief. More to come on that. Next week, we're also meeting with FinCEN and our insurance carriers. So we're trying to help FinCEN understand some of the challenges that businesses are facing as they navigate through the filing requirements, and then also the concerns around unauthorized practice of law. Again, more to come on that. It's fast changing. We continue to push FinCEN to understand the challenges around that 30-day change requirement. So we'll keep you updated on all of that. But I wanted to shout out the July 18th update because I thought that was a really in-depth look at what's going on with BOI, provided by Melanie Lauritsen, our Vice President of Tax Advocacy. And as always, a reminder to visit our BOI Resource Center. That'll give you a direct link to the FAQs that FinCEN is posting and to their small entity compliance guide, which I think is also helpful.
Lisa, great update. Two things I'll just emphasize is one, completely agree that the communications effort behind BOI is going to be massive, and I know you and the team are doing everything you can to to work multiple paths, but definitely get the word out. And then I just think it's really great how engaged you and Melanie's team are with FinCEN. I mean, the level of active discussions is impressive. It's frequent. It's ongoing. So I just think it's we're gonna have a lot of current information to share with town hall members as it comes out. So I just think that's fantastic. So I'm going to go ahead. I know you have other technical updates to make. I'll turn it over to you, and we'll be back on shortly.
That's great. Thank you, Michael. And again, hats off to our entire advocacy team. They've been focused on this initiative for quite some time, and those conversations with FinCEN are really important. So congrats to them. Another bad news around more areas impacted by a disaster, and this is for Hurricane Debbie victims. We had 4 states that were impacted that were included in this disaster relief declaration. I know there were many areas of the country that were impacted. So South Carolina, North Carolina, Florida, Georgia, there are particular counties in those states that now have until February 3rd, 2025 for certain of their filing and payment due dates. Always a reminder about our Disaster Resource Center and about the AICPA Benevolent Fund, which is here to help members impacted by not just natural disasters, but health issues and other things that could impact them. So always like to give a plug to that because it's an under-tapped resource for situations like this. Can't do even a short update without talking about employee retention credit. And big news has come out very recently from the IRS. They've announced that they are shifting the end date of the moratorium on processing any new claims. So if you remember, we've talked in the past about the moratorium that the IRS instituted to help slow down the risk of fraudulent payments going out into the market. They were reacting to all of the very aggressive providers out there who were promising big bucks, no whammies. And so they basically just put a halt to processing any claims that were received after September 14. Now they're saying we're going to look at claims between September 14 and January 31 if it was filed by that date. Now that January 31 date is significant. It is not a coincidence. And that is a date that we've talked a lot about on town halls because that is a date that has been floated in some legislation that actually passed the House back in February. And it said, might have passed in January, time's a blur, but that legislation that passed the House only had a January 31, 2024 cutoff for any additional ERC claims to be filed. That was a huge pay-for provision of some proposed legislation. Again, proposed. It has not passed the Senate. It is not law, but that date is out there in the atmosphere. So the IRS statement said, we're going to use January 31 in case something comes to reality around that date. And then they wouldn't have to do additional cleanup. So it is somewhat good news in that they are broadening the scope of the moratorium, but still a lot of claims are going to be in that holding period. They've also announced that they sent out about 28,000 denial letters on ERC claims that were filed. That totaled about $5 billion. Now, I've already heard from a lot of CPAs that they've gotten denial letters for their clients' claims that are not accurate. So the IRS has said we expect about a 90% accuracy rate with those denial letters that we've sent out. But what happens if you got one of those and you're in that 10% or so where you got in your mind an inappropriate denial? Then the process is to file an administrative appeal. The IRS says that they are going to be looking at the data that comes into that administrative appeal process to try to tighten up the algorithm that they're using that evaluates the risk levels of claims. So on a previous town hall, we talked about the process that IRS has been going through during this whole moratorium period to analyze 1 million claims and put them into a low risk bucket, a medium risk, and a high risk bucket. So unfortunately, if you got one of those denial letters that you feel is wrong, the relief is to file an administrative appeal, but that should influence the next tranche of evaluations that the IRS is doing. We also heard from the IRS that they are going to begin sending out payments on about 50,000 low-risk claims, and we should be looking for those in September with another large tranche of low-risk claims to be paid in the fall. A shout out to the Employee Resource Center, a lot of good content there, and you'll find links to some of our latest podcasts that also talk about employee retention credit because I know it's a challenging pain point. So we also want to remind you about the options if your client or you as an employer believe that you filed an ERC claim and think, well, okay, maybe it was invalid now that I've learned more about it. what are your options? The IRS has said that they expect to reopen a voluntary disclosure program soon. And, as a reminder, we had one of those that went from mid-December to mid-March, very short period of time. What we're hearing is that the next voluntary disclosure program won't be as generous as that first one, which is not a surprise. But I think that we're going to hear something on that pretty soon. So just keep an eye out in your inbox. We'll update you through CPA letter. And if it comes out today or tomorrow, or whatever, we'll make sure that we get you information on that. You do have other options if you or a client think that an invalid ERC claim has been filed. And we've talked about these in the past. You can withdraw it, and that's valid if you have an employer who has not received a refund or didn't cash their check yet. And also, as a last resort, you can, it doesn't have to be a last resort, you can amend the initial filings that generated the claim as long as the statute of limitations hasn't been closed, I'm sorry. So a lot of information around on BOI, ERC. We'll continue to keep you updated on other hot topics, and you'll have a full update in a couple of weeks when we come back live to you.
As usual, Lisa, great update. Lots of, as quiet as it may feel in the month of August, still a lot of stuff happening. So a lot of good information there. So I just want to, again, thank Rachel and Lisa, for sharing what they've shared. We will be back on our regular schedule in 2 weeks, Thursday, August 29th. That will be a live session of the town hall. And then really for the balance of the year, we'll be back on normal frequency and normal format. But we do hope you enjoyed this special edition town hall. The August 29th town hall promises to be a pretty compelling one. As you see, we have a full agenda. I did want to highlight that Marcy Rossell will be back with us for an economic forecast and update. Marcy's been on the town hall previously, does a great job of in layman's terms helping make sense of the economy and kind of where she sees things going. So we're looking forward to having Marcy back on, and then Lisa and the team is gonna bring in the folks from Aon to give a risk update. So a really full agenda for the 29th. We hope you'll all be back with us then. Again, with that, I just want to thank everybody for being with us here today. Hopefully this abbreviated town hall was useful. There were some good insights. Maybe you're watching on a beach or on a hammock. We hope. And we'll see everybody back on August 29th. So thank you, Lisa. Enjoy the rest of the summer, and we'll talk to everybody in a couple of weeks.
And I hope everybody's prioritizing some time off, away from the office, disconnected from your email and your phone, and enjoying either the beach, right, the mountains, or lounging around in a staycation.
Well said, Lisa. And that goes for you too. Well said.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.